For the next 10 minutes or so, I want you to listen to what I'm about to. Forget the money, forget risk management, forget about trading plan. Because without your mental well-being, you'll cripple as a Forex trader. And this is where the psychology of a trader is important. Oftentimes, people separate the emotion and the psychology of a trader. However, they are intertwined because they both occur in the mind. And in this video, I'll be sharing how to lose that fear factor and become a confident, profitable trader. So if any of those interest you, stick around to the end. My name is Grant. Welcome if you're new, and if you're returning, enough love. And if you wouldn't mind leaving a like, comment, subscribe, it would really help me out a lot. So without further ado, let's begin. If you have watched any of my previous videos, you'd probably have heard me say you should think about your deposit as if you're throwing it in the trash. And honestly, this is the first stepping stone of being zen with your psychology as a trader. And I've said this and I'm going to say it again. If you're losing money, just think of it as if you're throwing it in the trash. Why I say this? Because if you lose, well, it has already been in the trash. And if you win, well, congratulations. The aim is really to think about your deposit as a ticket of opportunity to enter trades rather than cash that you could use and spend on something else. So say you have $100 in your account and you're risking 5% per trade. That means you're risking $5 per trade. So I want you to think of it this way. I want you to think of it that you have 20 tickets and not $100 cash that you could use to go out or buy fast food or go to the movies. And if you fail to do this and think about your deposit as such, you will fall into number 2 trap, which is overtrading and revenge trading. Money, believe it or not, has a significant mental effect on people, and oftentimes people see Forex as a way to get rich quick overnight. And I won't say no, you can't get rich with Forex, but it's not overnight. So persons come into Forex with this type of mindset and they place a trade and they be like, alright, they lose one time, they'll win the next time, and they try again and then lose again, and then they try again and they lose again, and then they try again and they lose again, and then before you know it, they have blown their account. And honestly, I can't really blame you guys, because the profitable Forex traders or even the fake gurus pose this fake lifestyle that allow persons to perceive Forex as this holy gate that once you pay for the course or learn it, you can be printing money just like them. And yeah, it's true, you can make money from Forex. The only thing they lie about is how fast will it happen. The truth is, as beginner Forex traders, it will take time. Some faster than others, but nevertheless, it will take time. And there are really 3 phases in a successful Forex trader's journey. The first phase is the learning phase, which is learning all the information that you need in order to trade. I personally created a free playlist for you guys. I honestly really don't have anything to sell you in the Forex space, but I just feel generous. And say I might be boring, or you just don't feel like watching something for free because you feel like the value is different, then you can find a mentor. The only tricky thing is, not all persons on social media that you see post Forex trade and think is actually a profitable trader. They just pose as if they are, and then that kind of incentivizes you on a mental basis to just give them money so that you can start making money, if that makes sense. But say you're lucky and you find the right mentor that teaches you the right information and such, you go to phase 2, which is the learning phase. And understand that education phase and learning phase is 2 different phases. Education is where you get the knowledge, and the learning phase is really where education meets practice, failure, blown accounts, doubt, strategy development, and just practice. And the sad thing is, this is where most people just give up on their journey in Forex trading. And this is where mentors leave out because no one likes to hear the hard facts. They prefer the lie that they can dream about. Alright, learn Forex and now we're going to make money. And that is why people buy the lottery. And even though you know that you have a higher chance of getting struck by lightning on a cloudy day, they still buy the lottery because it's just a dream. And that is what really fake mentors tell you. And I made a video about why people buy the lottery. You can go check that out. I'll probably leave a link in the description or something, or it probably just pop up top. So say now that you have been through phase 1 and 2, by now you're just possibly the 2% of traders that actually remain. The strong ones, the ones that work diligently and stuck to their craft. Now we are at phase 3, and phase 3 is the execution phase. Alright, so the execution phase is where you have learned all you need to learn, You have been through the losses, you have been through the psychological torment, and now you're profitable. This is where you continuously backtest, but now you're disciplined. You find a strategy that works for you, and now you're golden. This is where people talk about end results and fail to understand that you can't have an end before you have a start. So family, I mind you, don't fall for that trap. Alright, so to complete with the phase of a forex trader, we're going to go to a next issue that traders often face, and this is greed. And greed is simply, this is where you feel like the market is a friend, and where you want it to go, it will go, but you won't, not all the time. Greed, from my experience, comes in two forms. You have the wanting the market to go really far in a short space of time, and you have over-risking your small account to amass big gains. Don't, because I've said this before, I'm gonna say it again, the market is unpredictable. Because the truth is, you can expect that the market will go down, and it seems like it's going to go down there, but then it just out of nowhere has a surge, or it spikes up and you end up losing all the money that you have gained. I personally recommend 1 to 3 risk to reward and then leave, so you can live to fight another day. The second thing is stacking, which is simply just continuously adding and adding and adding and adding lot sizes to your trade. And this is dangerous, because if the market decides to go against your favor, then you'll be doomed. Personally, I advise to just set a specific amount of money that you are willing to lose, and once that's done, then you leave and fight another day. But let's say that you don't want to listen to me and you want to continuously stack. Just take my advice. The more lots you add to your account, just ensure that as the trade continuously goes into your favor, you place your stop loss further and further down into profits. So if in the event that the market goes against you, then you'll be safe, or at least you won't lose as much as you would if you just had it where it was initially. Alright, the last thing to avoid in order to maintain your psychological well-being is don't be intimidated by social media. Because most people put up their best version and won't show their mistakes. They'll only show when they win. You have to understand, this is how mentors and fake gurus lure you. Because be honest, would you buy a course from a guy that has a Toyota who is profitable but loses 30% of the time and tells you it won't be easy, but if you work hard, you will become successful? Or would you prefer to buy a course from someone that shows up in a Lamborghini, flexing that they are 100% profitable and have an easy strategy to make you start making money under 2 weeks? I personally got caught in one incident such as this. It wasn't a course, but it was signals, and they were posting that they were 100%, and for the free service that they provided, every trade was 100 until you paid for it. But have I? That's for next video. But that is it for this video, guys. I'll ask for you guys, just like, comment, share, subscribe if you're new, share with a friend, and love you guys, and see you in the next video. Oh, and for everybody who is still here, one of the secrets that kind of helps with the psychology is by backtesting and journaling your entry. Because when you journal the entry, you kind of get like an understanding of what you have done wrong, because it feels a way that you'll be losing and consistently losing. At the same time, you don't know where or what you're doing wrong. So with this, I think knowledge or knowing what is going on with your trading or your trading plan helps. So I made a video before on journaling, you could check that out as well, and you can write down what you need to do. But for the two main things that I might say, alright, is crucial to your psychology is these two. This is where your reasoning for your trades. So if you're at the top of yourself, you know exactly price push above 50-minute roof, retesting and start rejecting, confirming new floors which want low roof and the target, etc, 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 etc. So with that now, you understand why you took that trade, so you can know if alright, I messed up because I flunked out, or I was just doing foolishness, or I was making stupid moves. You'll know what exactly took place at that particular point in time. Can know your pair. So the rest of the information are crucial, but that's in journaling. I'm just talking about your psychological well-being. So the other important part is where, like, when you comment. So say you're commenting. So let's say you're commenting. Commenting is also where you'd actually like say why my predicament was right, the market just move like a move shaky, or like when you win you say I feel a bit more confident, woke up a bit early, etc. See, fear that the market would turn over on trend line, so I exited. Still a good trade. So it's like telling what you saw in the market first to get like understanding of what took place, and then at the end now you are explaining exactly how that market or how that particular trade it took let you feel. So if you don't do anything else, just focus on your comments, which is after taking the trade, and focus on your reasoning. And also another important thing is like say that you are actually doing a trade and you've been losing and you've been winning but you don't know exactly what happened. You can either look at your account and say you have $100 and you have 150. I have $100, no, you have $70 to know like a rough estimate of how much you lost. But in percentage form, seeing that that alright, I win 50% of the time, I grow my account 50%, your win ratio of 73%. And those bits of information kind of helps to solidify the concept of a great trader. But I won't hold you guys long. That was my little insight for the 1% of persons that still are here. So love you guys, see you in the next one.